I'm going over this chart. It's the YM. I just want to kind of show what happened here. As you can see, the YM is puking, but the synthetic index has demand. It had supply, but demand took over, pulled back, did a spring, and it's going higher. So it's a clear divergence. Over here, this is a um, clear divergence. Why? Because this is going higher, and this thing is going lower. So, and it keeps on going higher. So at this point, I knew that like the YM is going to catch up. All right, they're just playing. They just did like some type of shakeout or spring or whatever, and they're going to catch up. So I'm going to kind of explain the some stuff here. All right, so they did this, and the synthetic index is over here, all the way up here. All right, now there are a couple of factors that need to be taken into account. First of all, the group is going higher while the YM is diverging, it's going lower. So what does that mean? Typically it means, the way I view it is like the group chart is the truth chart. Right? More often than not, the group chart is the truth chart, whereas an individual instrument by itself, I think is you need more than it. Okay, so the YM is gonna eventually go with it. So then this thing starts moving sideways. All right. So I know that this is accumulation right there. Ding 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 ding. This sideways movement. While these guys are going on, I know it's accumulation. But how do I? What helps me? The PMF volume chart, also known as the tape reading chart, is also known as the accumulation distribution chart. So on this chart, that sideways action is this. Okay? This is what that sideways action is. So it starts moving sideways like this. 0 here, 0 here, 0 here. Heavy volume, unable to do anything. And then all of a sudden, you have this big volume come in. They're actually buying back here, and I know they are because they drive lower and bought it all back in this area. But anyway, the clear indication is right here. That's the biggest volume in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 columns. Alright, so that right there is accumulation into markup. That's a markup indication. Another way to detect this accumulation was right here, where 16,749 contracts traded within these levels right here. This right here, I can't really put an arrow there, but this level had 16,749 and above it 16,178. But this level was very, very pronounced. Okay, before all of this other action, this volume was building, 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 which means that they're basically buying, 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 buying. They're accumulating within these levels. And this volume was very pronounced relative to all of the others. In fact, this was the highest volume out of all the levels. It was higher than the distribution volume up here, which was 11,645. Distribution was about 11,645, and look at the damage it did. Alright, so that's the distribution up here, and then they broke it down, and then all of a sudden 16,749 build up at this point, which is more accumulation than that initial distribution. So that was a key indication, along with the fact that these guys, the entire group is going higher. The entire group is going higher. That's the second bullish indication. Third is look at where they're doing their thing. All right, their accumulation, all of that activity, all of that accumulation. This is the higher time frame 60-minute chart. All of that occurred in this one bar. In that one bar, all of that accumulation occurred. This bar is a spring of this level. It is in that spring, that 160-minute bar, or around, maybe a little bit of the left and the right, but predominantly within that 1 hour. There was a little bit more, like, here and there, but in this position right here, this position is where all of this took place. Okay, in that one bar and a little bit left and a little bit to the right, all of this took place. All of this accumulation took place on that spring. So you have the market on the high time frame, which is in a, try to show this, which is on a spring position. On that spring position, look, now I'm highlighting over the bar. Look at that one bar encompasses all of this point and figure action. See that? That one spring bar is the same as all of this within that same time period. All of this took place. That accumulation took that place within that one bar. All of this took place where they built 16,749, and on top of it 16,178, basically like 32,000 plus. Alright, so all of that is building, 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 and then they have this high volume breakout. Okay, so after that it's just a matter of getting in. All you gotta do is get in. So even if you don't get in here, like these types of moves, there's almost always a retest or whatever. The key is getting in on the retest without getting shaken out. So this was a highly likely area. So the pullback, go up, make a higher high, correct, do the spring to get rid of these stops, and test this area. So this was the area to get in, and then there was this rally up here. Now I don't know the extent of this rally, what it's going to be. Is it going to reverse? I don't know. All right, it's a small move so far. However, going back to the point and figure, the count across this line is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Across this line, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So projects to 24,810, around 24,810. That's where the projection is. And from what I see, the pullback of supply, I don't see it. I mean, look at the demand, supply. So look at this. Where's the supply? Okay, but I'm still, I don't know what's going to happen. It can come in at any time, and these are just guesstimations about where the market can go based off of this cause. It can go into this area based off of this accumulation across these two areas, two ranges or whatever, levels. So that's what I'm looking for. Move up into this area. So far so good. And what's kind of interesting me now is this area here, where you have 19,962. I I'm not sure what that is yet, but it would be weird if that's redistribution so quick. Maybe it is, maybe it isn't. It could be absorption of this area, like they have to get above this selling area right here, right? So that selling area needs to be absorbed to go higher. It could be reaccumulation. I don't know. But I'm looking into this area because, as you can see, you're 30 minutes up on 4,000, 35 minutes up on 5,000. So already there is a lot of effort. Okay? There's a lot of effort. So it looks to me that it looks at right now, and I'm not sure, I'm going to need more indications, that this area is trying to absorb this area in order to go higher, to go to the target. You know what I mean? So it looks like this area has encountered the supply from this area. They're supplying this area right here. Okay? And it looks like they're rallied. They're hitting this supply area, and the high volume that you're seeing that's building up across this level is actually trying to absorb the sellers at this resistance level in order to go higher. And so far so good. I don't see, the group is still going up, right? The equities group is still going up. See that? And it hasn't gone red. If it starts going red, there's going to be an issue. I mean, so long as the trend is up, equity trend is up, while this is correcting or absorbing or whatever it's doing, I don't know, the equities are actually, they're also building up something over here. I don't know if that's distribution or absorption to go higher, but whatever it is, we'll find out. Anyway, this is really important because this is how you coordinate the different charts, which is a real skill in itself. To be able to coordinate the higher time frame, the lower time frame, the group, and some type of volume based chart, whether it's a footprint chart or a point and figure tape reading chart or whatever. To be able to coordinate those four all together in a way that's not too taxing will allow you to see a really good picture of the market. Much more differently if you were just using a bar chart or a candle chart, or like what you hear, oh, price is king, I'm just going to use candles. Like, that may work for someone, I don't know, but you're not seeing the whole picture there. You're not seeing the accumulation. You're not seeing, the numbers. You're just seeing a wick. So that's and that may be enough. I don't know, but it'll be, if you're gonna judge, then they're tools to help the judgment get better. One is see the breadth of the market, which is identified by the group or some type of advanced decline indicator or the leaders, etc. And then be able to see where smart money has put their positions. They're putting their positions at level A or level B, or and all that. So we're going to see how this pullback behaves, and if it reverses up, or maybe there's going to be a change in trend. Don't know yet, but I think it's just going to test and reverse, but we'll see. That's all, folks. Take care.